Welcome everyone, my name is Neil Coughlin, and today we're going to start with an introduction to inheritance tax, often shortened to IHT. So, you hear me say IHT, we're talking about inheritance tax. So, let's look at our goals for the day. So the goal for this session is first and foremost, we're going to look at understanding the scope of inheritance tax. So this basically means what inheritance tax covers. So whenever you see this word here, we've got this word here, scope, all right, that basically means what the entire tax covers. Also, after we go over that, we're going to learn how to compute a basic death estate calculation. So nothing too complicated for the first session today, but just to give you an idea of how to go about calculating a death estate. And finally, probably one of the most important things that we'll look at is we're going to understand which lifetime transfers are exempt from inheritance tax, because there are some transfers that you have that do not get charged any IHT. So we're going to be looking at all of those today. So let's start by looking at first the scope of IHT. Okay, as I just said, the scope means what it covers. So inheritance tax applies to what we call the estate. Right? So the estate is basically what you leave when you die. So some people have very big estates. If you're a millionaire, you're going to have millions of dollars, pounds, I should say, in your estate. Or it might just be a couple thousand pounds in your estate. It just depends on what you accumulated over your lifetime. So, as we know, this is the estate of someone who has died, unfortunately. IHT can sometimes be called the depressing tax because we're going to be talking about death quite a lot when we talk about IHT. And a lot of students think that IHT only is when someone dies. That's not necessarily the case. Certain transfers that you make during your lifetime can be subject to IHT. Now, we're not going to be looking at those in this session, but please be aware that if you transfer, for example, funds into a trust for your children or for someone else, these could be subject to IHT. Right? But we will be looking at these in later sessions. Now, the next thing here is that we have to talk about is domicile. Now, domicile is different from residence. So you have to be very careful. So if an individual is UK domiciled, they are subject to IHT on their global assets. So it doesn't matter if they're in the UK or, let's say, in China. If they are UK domiciled, they are subject to IHT. Now, domicile basis basically means it's usually where you're born and where you live. That is usually your domicile. Now, residency, you can be resident in another country. Like, let's say that you live in Germany for many years and you get residency status. Right? Here in the UK, we have people who are permanent residents here. That does not mean that they are necessarily domiciled. To be domiciled, you have to either be born in a country or make an election to be considered UK domiciled. Alright? So just make sure that you know the difference between the two. Alright? So the next thing is if you are non-UK domiciled. Alright? So let's say that you're a permanent resident here, but you do not have you're considered a non-dom. That's what we say is non-domiciled. You are only subject to the IHT for your property here in the United Kingdom. Right? So everything that's overseas is not subject to the IHT. Also, a very important thing is that non-UK domiciled people can elect to be treated as UK domiciled. And there's quite a few benefits that we'll look at in a few minutes for this, of why you want to be treated as a UK domiciled person, because you get what are known as exempt transfers, for example, to your spouse. Right? So that's why some people elect to do that. But basically, to become UK domiciled is easier. To lose your UK domiciled status is quite difficult. So you basically have to cut all ties with the UK to be considered non-domiciled here in the UK. Okay? So that covers the scope of IHT. So are there any questions on that before we move on? So Rob's fine. How about you, Alina? Are you alright? Okay, good. So let's move on to now looking at the types of transfers that go into IHT. So the first type of transfer we really like because they are exempt. So that means that there's no IHT being charged on this. Right? We'll look at what the exempt transfers are. But basically, if it says that a transfer is exempt, there's no IHT doing it at all. Now, I've said before, there are some lifetime transfers that we have that are subject to IHT. Alright? So usually these are trusts. Right? So if you ever see someone giving money into a trust, they might be charged IHT. Now, the third type we have are what are known as potentially exempt transfers. Now, potentially exempt transfers, as the name says, might be exempt from IHT. So if the person lives for more than 7 years. So a good tax planning issue is to say to people that you should start giving some assets away if you think you're going to die, but you want to make sure that they live for more than 7 years, because then it's completely exempt from IHT. Now, we'll look in later sessions at what happens if they die before the 7 years, but just for now know that if you have a potentially exempt transfer, if the person lives for more than 7 years, it's exempt. And the final one is, unfortunately, let's say we have our client, John Smith, he dies, right? And these are what are known as transfers on death. And this is what we're going to be looking at today, right? And this is the person's estate, minus any liabilities they have, so unpaid bills, right? And any funeral expenses that they might have. And that gives us the death estate. Now, there are some exemptions to what is allowable, what is not allowable for a deduction from the death estate. We'll look at that in later sessions. So let's start with looking at these nice exempt transfers. So, as I stated before, if you have a UK domiciled spouse or civil partner, these are exempt transfers. So let's say that John Smith transfers all of his assets to his wife, and his wife is UK domiciled. That basically means that there's no IHT due on it. Now, later on, if his wife transfers it to their children, that is not exempt, because it's only spouses or civil partners where you can get the exemption. Now, sometimes we give money to charities. Alright, so charities are a good way to get to lower your IHT liability. Some museums as well. You give money to universities or amateur sports clubs. Right? So these are also exempt. So this is once again, as you know, in tax is not only about getting money. Tax is also the government's way to try to get us to act a certain way. So they're trying to get us to give money to these non-for-profit organizations. So to do that, they make it exempt, so to get more people to actually do it. And also, if you transfer any money to qualifying political parties. Now, you don't really need to know the actual qualification things. It will say when you take this exam if it's qualifying or not qualifying. But basically, it has to be a legitimate political party. So, the Raving Loony Party it would not be considered a qualifying political party. And the final exempt transfer that we have are transfers to land or housing associations. So if you transfer to any of these, do any of these 4 transfers, there's no IHT on it, and we reduce the death estate by those transfer amounts. So is that clear, you guys? Okay, good. Let's move on now to look at, unfortunately, our client has died, so let's look at what happens on transfers for death. So the first thing that you have to know is that every person, if they're UK domiciled, I should say, has a what's called the nil rate band. And the nil rate band for the 2016 tax year is 16-17 is £325,000. Now this hasn't changed in the past couple of years, but if you look at other rates in years before, you'll see that it was a lot lower. And with every 325, you've stayed for quite a while. All right. So if there's been no lifetime transfers, all right, this amount is simply deducted from the debt estate. So this is kind of the government's way of giving you, I wouldn't say free transfer, but you know, a bit of sympathy, all right, saying that we're not going to charge you on everything we transfer. You get 325,000 exempt transfers. So after we deduct the nil reg band, we deduct any exempt transfers. So remember we said spouses, political parties, things like that. All right, so after we do that, anything that's left is taxed at a very high rate. As you can see here, it is taxed at 40%. Right, so that is quite a lot. Okay. So Rob's got a question here, so let's why is the rate so high? Good question, Rob. The rate is so high because this is basically a way that the government is trying to claw back some money from the states. Because if the IHT was very low, people would just be holding on to assets and holding on to their funds, and there would be no so money wouldn't be coming into the government. So IHT has always been historically high, and historically, if you look at, for example, in the 1920s, you know, if you look at Downton Abbey, you know, they actually talk about IHT, and it was the same in the past as well, because IHT actually, some of these big houses, they had, when the final person died, like in World War I, the estate was ruined, all right, so they couldn't actually afford the IHT, so they had to sell their property. It's just high because that's the way it is. Right? It's been historically high, and it's just a way for the governments to get money back in so that people aren't keeping money away. Because if you just keep money in your state, it's not coming into the UK coffers. Okay, is that clear? Sorry, I can't. I can go into more detail, but I think it would just confuse you a little bit more. But just think of it as a way of them to get the money back. To stop, we say squirreling away. Good. All right. Now, the final thing is who actually pays the IHT? Who is actually responsible for paying it? Well, this is what we call the executor. Now, when someone dies, they have their will, and then they have what's known as the executor of the will or the executor of the estate. These are the people that are responsible for actually paying the IHT. So basically what they do is all the assets and all the money comes to the executor. The executor then pays the IHT and then distributes what's left over to what are known as the beneficiaries. But the beneficiaries on the death estate do not pay the tax. Now, if it's a lifetime transfer and there's a potentially exempt transfer that hasn't gone to the 7 years, you'll see in later sessions that it's not the executor, it's the person who got the gift. But for right now, on transfers of debt, you have to know that it's the executor of the estate. Okay? Any questions on that before we move on? Okay. Okay, good. So let's take a little example of a question that might come up on your exam. Now, this is a kind of introductory question, so we'll get into more complicated questions later on. But I've created this short little example. So we have a client, and his name is Sam Smith, and he died, unfortunately, as we're talking about IHT, and he's left an estate worth £800,000. So there are a few extra things added to this. So he left £300,000 to his wife Sarah, just to make sure that she was, okay and that she could afford everything. He also left £30,000 to a qualifying political party, okay? And the remainder of his estate will be left to his son. So we also need to know who the executor of his will is. Well, he's elected for his sister Jane to be the executor of his will. So the question asks us here to calculate the IHT payable and calculate the amount to be received by his son. Right? So his son is not going to receive, what does it say? £470,000. He's not going to receive that because we have to actually deduct the IHT from that. And the following thing is, this is usually a multiple choice question in a box that they say, who is responsible for paying HT? Alright, so let's look at how we tackle these types of questions. So the first thing that we should look at is you should ask yourselves, is it exempt or non-exempt? Right? So here we're assuming that Sarah is UK domiciled, so this would be exempt. So we can take that off. That will be exempt. Qualifying political parties, if you remember, is also an exempt transfer, so we take that off. Alright, the remainder left to his son will not be an exempt transfer, because remember, exempt transfers are only to your spouse or civil partner. Okay, so let's look at the calculation of how to do this. So we always start with the total value of the estate. So if we look here, we see that the total value of the estate is £800,000. So now we deduct the exempt transfers. So to his wife Sarah, we deduct the £300,000 because that is his spouse. And also we have this political party. So we deduct the £30,000 from the political party. So these are all exempt from IHT, and no IHT will be charged. So that leaves us with £470,000 of non-exempt transfers. Now what we cannot forget is we also get this, what we call the nil rate band. And because this is the 16-17 tax year, you can see here that the nil rate band is £325,000. So we simply deduct £325,000 from the 470 to give us £145,000. So that's the actual amount that will be charged IHT. And if you remember, on the death estate, IHT is 40%. So we take the £145,000, we multiply it times the 40% to give us the IHT payable of £58,000. So that's the actual amount that they will have, that the executor Jane, will have to pay from the estate. So now we need to look at how much is actually going to be left to his son. So the total value of the estate was £800,000. Now, the transfers to the wife and charity total £330,000. So of course he's not going to get that. Right? That's already leaving the estate. And the IHT, we have here is £58,000. So the balance that's going to be left over to the son is the son will be receiving £412,000. So hopefully that's clear. So do you guys have any questions on that calculation before we move on? Oh, thanks. Well, that's what I'm here for, Rob, so great. But let's just review this this module. So the things you have to remember from this module is IHT is payable by UK domiciled individuals. Alright? So if there are just residents, then they are only charged on their UK assets, not their overseas assets. We have to remember that there's exempt transfers. Alright, so if you look at your course notes and your tutorial guides, you will see the list of all the exempt transfers, so you need to memorize those. Alright, it's very important that you do that. Now, the one thing I will also say when I did my exams is I would always forget the nil rate band. So be very careful that you don't do that, because otherwise your calculation will not be correct. Right? But make sure to take the nil rate band off after you do the exempt transfers first. Remember that the rates of on the death estate, now there are other rates of IHT which we'll go into in the next session. Alright, but just remember on death estate it's 40%. And finally, remember that IHT is payable by the executor of the will. So, thank you for paying attention to this unit. Now remember, we have many ways that you can study AAT at Osborne Training, including these online courses here, but we also have classroom-based tuition, and we also have home study options. Alright, so if you are interested in joining one of our courses, please make sure to contact us at Osborne Training so that we can help you to really succeed in your exams. Thank you very much, Alina. It's my pleasure helping you out. All right, hopefully good luck with your studying, and we will see each other very soon. Well, no problem. Thank you for coming and for attending. All right, so have a great day, and we will continue on to looking at IHT in more depth in later sessions. On behalf of Osborne Training, my name is Neil Cochran,